Would you rather pay 0% or 30% on your debt? Would you rather earn 4% on $1,000 or on $0? Guys, these aren't meant to be trick questions, and if you're interested in the options where you mathematically come out ahead, then you might be interested in 0% APR credit card strategies. See, banks want our business, and to incentivize us to get their credit cards, they often attach welcome offers in the form of cashback, points and miles, and sometimes limited time offers where you don't pay any interest on your credit card balance. Seems simple enough, right? You spend $1,000 on a card with a 12-month 0% APR period, and then you pay off the $1,000 at the end of 12 months. Well, first of all, there are nuances with how you should go about paying off that $1,000. Also, there are different types of 0% APR offers, potential credit score impacts when you're pursuing a 0% APR strategy, as well as potential psychological considerations. All this to say, to correctly hack 0% APR cards, there are some complexities that you need to be aware of, which we'll go through in this video. I've taken advantage of 0% APR offers before and believe that by executing the strategy in a well-planned manner, you'll be able to get value just like I did. While many credit cards are advertised as offering 0% APR, not all of these offers are created equal, and it's not just a matter of one being 12 months and another being 18 months. Broadly speaking, there are 4 activities on which you can be assessed interest on: purchases, balance transfers, cash advances, and utilization of your credit via other financing types like loans and lines of credit. As far as I know, those last 2 will never come with 0% APR offers, and so they just shouldn't be considered. Many cards like the Chase Freedom Flex, the Capital One Saver Rewards, and the Citi Rewards Plus come with 0% APR offers on both purchases and balance transfers. With purchases, you can truly realize some gains with no fee. Here's how. Say you spend $1,000 on a card, but instead of paying off that $1,000 in full after the first statement closed, which is what you would typically do to avoid 20 to 30% in interest, you would instead just make the minimum monthly payment and put that $1,000 in a high yield savings account. That 4-ish% that you earn on the $1,000, well, it wouldn't be a thing without the 0% intro APR on purchases. With balance transfers, however, it's less about earning free money and more about damage control, but still with the cost. Even though it's 0% intro APR on the balance transfer, you'll still always get assessed the balance transfer fee, which on the 3 aforementioned cards is the greater of $5 or 3% of the transferred amount. And so it only makes sense to pay off a debt with a 0% intro APR card if that debt is incurring more than 3% interest, which frankly these days is mostly going to be the case unless you have some subsidized student loan or maybe something before 2022 when rates were at an all-time low. Okay, we now have knowledge on 0% APR on purchases and balance transfers, but this might be a moot point if you don't read the fine print. Specifically, some cards might just offer 0% intro APR on purchases, and some might be even more restrictive than that. Take, for example, the MX Business Gold, which comes with 0% intro APR for 6 months on purchases eligible for pay over time. These are generally purchases of $100 or more and will be indicated as eligible for pay over time on your transaction statement. Point being, make sure you read the terms and conditions regarding exactly what type of 0% APR that you're getting on a certain card. Now, let's say that you've narrowed down your options for 0% APR cards. Say you want to stick with Chase. You then notice, hey, we have both personal and business cards. Is one better than the other? Let's break down the facts to find the answer. First off, personal credit cards will show up on your personal credit report for obvious reasons, while business credit cards typically don't show up on your personal credit report. Thus, balances on your business credit card also won't show up on your personal credit report, meaning the balance doesn't get reflected in your calculation of your personal credit utilization. To illustrate the difference, say you have a $5,000 credit limit on a Chase Freedom Flex and you spend $1,000 on it, and thus your credit utilization on that card will be $1,000 divided by $5,000 equals 20%. And when you calculate your overall credit utilization, that $1,000 and $5,000 will both come into play. On the other hand, if you have the same credit limit and the same spend on the business Chase Income Limited credit card, then neither of those numbers will be reflected in the calculation of your personal credit utilization. The utilization factor is 30% of your overall FICO score, and so it's quite significant, and you would ideally want to pursue 0% APR strategies through business cards. Okay, so now we know that we're getting the appropriate type of 0% intro APR, and say we managed to get it on a business card. Let's make sure that we know how to appropriately pay off our balances and also know about the dire consequences of not doing so. The payment approach that mathematically gets you the most ahead is by making minimum monthly payments up to right before your 0% intro APR period ends, and then pay off the remaining balance in full. Ideally, set up autopay minimums for 11 months if your period is for 12 months, and then the statement balance on month 12, making sure that the bank account that's funding your final payment is sufficiently funded. Incorrectly executing on this strategy is bad. By missing a minimum monthly payment, you'll incur a late fee, get a huge hit on your credit score, and in some cases, lose your privileges to your 0% APR period, and instead be incurred a penalty APR. And if you miss that last statement balance period, you'll be hit with all of that backloaded interest. Crucially, 0% APR doesn't mean that interest isn't accruing on your balance. Rather, the interest is just being deferred until the end of the 0% APR period. If you want to mitigate these risks a little bit with the slight downside of having a little less money in your high-yield savings account, you can take the approach that I take, which is to set automatic fixed payments such that at the end of the 0% APR period, those fixed payments make up the entire statement balance. As an example, if you spend $6,000 on a card that has a 12-month 0% intro APR period and you don't spend any more on the card after that, then the fixed monthly payments should just be $6,000 divided by 12 equals $500. Of course, if you do spend more on the card, tweak the fixed monthly payments accordingly. Wow, so as long as we clear our balances before the 0% intro APR period ends, we will strictly come out ahead? On the surface, yes, though if we uncover some deeper layers of how 0% intro APR offers may affect our psychology towards spending and towards money, then maybe not so much. A paper on Science Direct discussed the effects of Buy Now Pay Later, or BNPL, essentially new age 0% APR, on customers' online purchase behavior. A key stat was that customers adopting BNPL spend 6.42% more than those who do not. We also have several personal finance gurus like Dave Ramsey and Caleb Hammer who caution against putting purchases or balance transferring to 0% APR cards. If one doesn't address the underlying problematic spending behavior, then the debt would just be racked all the way back up. If you want to truly benefit from 0% APR on purchases, then every time that you make a purchase on the card, ask yourself, would I have made the same purchase and been able to pay it off in full if the interest was still at its normal 30%? And if you balance transfer to a 0% APR card, challenge yourself with the plan to pay it off in full with either funds that you already have or funds that you are certain to earn in the future. Banks are doling out 0% APR offers not because they don't want to earn your interest. No. The degree of financial engineering in the US is really quite jarring. Let's not fall victim to their psychological plays and instead truly make some money from them. Guys, let me know if you've taken advantage of 0% APR offers before, or if you just think that the risks are too large for not too significant a reward. And if you've made it to this point in the video, consider giving it a like and subscribing to the channel. Frankly, with credit card welcome offers, 0% APR will always come in secondary to the massive cashback or points and miles offers that typically show up as well. To get a sense of some of the best rewards that you can receive with credit cards, check out this video on screen. Here's your card nerd signing off, and I'll see you in the next one. Peace.